Is the bottom in, or is this a fake out between battle between Bulls and Bears? Intensifies. Hey guys, it's Keith Allen, and man, sorry I missed you guys yesterday. It's been a busy week. Nonetheless, I'm glad it is Friday, and glad to see Bitcoin rallying right now. What we got to do is really climb into the charts, analyze, and see if we can figure out what is the cause, the catalyst for today's move, and whether or not this is indeed the bottom, if the bottom has been put in, or if this rally is going to run out of steam. So let's start out taking a look at what a potential catalyst is that could have started this rally here today. Obviously, things broke down after the monthly close, and we had having a nice recovery right now. We had, of course, Fed Chair Powell came out on the 1st and had the FOMC meeting. We didn't have any rate hikes or any rate cuts. Nobody expected them. He was somewhat dovish. I don't know if you'd say he was less hawkish than expected or somewhat dovish, whatever the case is. Net effect is the market liked the news. And what they liked the most is that he pretty much held the line on the possibility of rate cuts. He stated that he did not feel like the next move for the Fed would be a hike, and that they would remain data dependent. He did say that things had stalled out. Right, we had made good progress on inflation since it started. It had come down considerably, but concerned that things had stalled a bit, and was not ready to make any moves in terms of cuts until they saw more momentum, bringing inflation back to the target of 2%. So one of the things that could help bring that target back to 2% and breathe life into the hope and possibility of rate cuts sooner than later is the employment numbers. And we had an unemployment report come out today, and that is precisely what I believe is driving the price action we're seeing right now. Non-farm payrolls, a huge miss, right? I always say, lately, the numbers are either, if they're relatively flat, they're nothing burger, but a huge miss makes a difference. And we had a huge miss on non-farm payrolls. The consensus was for 243,000. Last month was 315,000. This month, 175,000. Huge miss. Unemployment rate, also really important metric, up 0.1%. That may not seem like a lot, but it is, right? If this gets above 4%, then I would really expect to see cuts coming sooner than later. Now, he also said that they're not going to react off of 1 month of data. They want to see a trend. That requires, multiple months of data to give them confidence that the trend is indeed moving in the right direction. Participation rate also, this one's actually flat, but average weekly hours down slightly, also another important metric. How about the government payrolls? Way down. Non-farm payrolls, way down. These are all important metrics. So that, in my opinion, is what is driving today's price action. Speaking of that price action, let's take a look and see what's happening now, right? And how we got here, because there was obviously a big breakdown. You remember we had this trend precognition signal on the monthly close. This is, of course, a tentative signal. And what it tells us is that it expected price to not make a higher high from last month, okay, which is around 72,750. That's not the all-time high. This is just the monthly, right? So not even talking about new all-time highs yet. Just this is indicating that there's a high probability that we will not make a higher high here this month. And in terms of where we stand right now and how we broke down, and incidentally, this probability score on this signal was 58 when it started. It's now today eroded just slightly to 57. Still a very solid, strong score. But we'll watch to see if this continues, if this erodes any further or regains strength as the month develops. On the weekly time frame, um, this 21-day moving average, super, super important to me. So, it's great that prices bounced from here um, at the moment. And if this holds as support, that would be fantastic. That would be very, very bullish. And of course, we're in this post-halving environment. So everybody expecting to see a move upward. The fact that we made a new all-time high before the halving, a little bit concerning, kind of odd, to be honest with you. Not reading too much into that yet, but gonna keep an eye on things and see how things develop. Because if we do have further breakdowns, if we lose this 21-day moving average, that's a big deal, or an ordeal, if you will. I had told you previously that I felt like if we lost this level up here, if we printed that lower low at 59, and you can see we have a nice strong signal here pointing the direction of today's boost. If we're to lose this level, I'm going to clear these out and make it easier to see now. You got the gist of trend precognition. Let's expand this a little bit. 59K was our prior low, the lower low, if you will. We lost it. We wicked through it. That last fuckery candle on the last day of the month just wicked below it. And I had told you guys that this would just be, a sign of weakness, just as it was when we had all these wicks below 69K, the prior all-time high. And so this makes me think that there's a higher potential to go back and revisit this area. And the fact that it has never been retested, nor has this one been retested, are reasons to believe that is a possibility. It's still a possibility. We're at the moment recovering this 100-day moving average. Well, I didn't get to post a video yesterday. I did tell you guys, post a couple of posts here and on the Material Indicators channel that this was very strong resistance, and it was. This 100-day moving average was very strong resistance, and we had liquidity stacked there that we could see in fire charts at that 60K level, and it has been taken out. And so now 65K still has some decent ask liquidity there, and that's a good technical level that will act as technical resistance. You can see we have a bit in this 63.5K range as well at the moment. So the good news, if we want to harvest the good news and the bad news out of this, the good news is that we did clear 60K, and there is a small bid wall, less than $8 million above 60K, attempting to hold price up at this level. I wouldn't trust this, by the way. This could rug pull very, very easily. I'm always cautious about new liquidity. What's concerning is what's below it, and what's below it is very, very little that could take us back down into this mid 50s range. And so if you're looking for dips to buy, that's not the worst thing. The fact that some of this liquidity has been pulled, some of it may have actually turned into market orders. And if we look here, you can see where this was pulled, right? And I'll even increase the contrast a little bit to make it easier to see for you. You can see that some of these bids were pulled, and when they turn into market orders, if they do turn into market orders, which is a good thing, right? And if you look down here, you can see that it does correlate with some market orders. So it is conceivable. We can't prove it indefinitely, but it is conceivable that some of this was converted into market orders. So that helped push price up. The problem is now it's gone. It's been absorbed by the market, and now it's gone. So if these levels hold up here, fantastic, all good. We keep rallying away and see what's, and go level by level, one level at a time. If this should break down, though, then we likely go revisit maybe, potentially lower low. And so that's what I'm watching in terms of determining whether a bottom is in or not. We have not yet made that determination. Yes, we see some robust buying out of the green class now, by the way, incidentally, after yellow had T-WOPed so much over the past several days. You can see that T-WOP has now gone in the other direction as price goes up. I mean, and that's That's a logical step, by the way. Some commentary in our Telegram community going, "Oh, what is this guy doing? He TWOP the whole way down and now he's dumping on the way up." Well, it's not even conventional wisdom. That's pretty much how the game is played. You buy when price is going down and you sell when price is going up. And that is how you minimize your slippage and you make the most profits. So I have no issue with that strategy whatsoever. Also, no guarantee that it's the same entity doing it all, right? Could be any number of people. These are small orders, but there's a lot of them. And they started here towards the end of the month, at the end of the month, paused here as things were chopping. And now, as price is moving up, they are dumping. Also, doesn't necessarily mean that it's a linear sale, right? You have no idea what their average cost was from what they may have bought before this. So it's just a good strategy to buy and sell, and this is large institutional volume happening in this instance. Yes, retail lives in this smaller class, no doubt about it. But if we switch over to the bin CVD, we can see that, let's see, roughly, they were at about 79, well, let's call it 80 million at the peak. And they've now sold just about all of it, and now started buying some back. So that's pretty significant for a short amount of time. That ain't retail dumping that much that fast. It's just not. It's the way it is. So again, watching for a validated RS flip, resistance support flip, for anybody not familiar with the term. And the problem is we haven't seen one. We certainly didn't get it up here at 69K. And it looked like we might get it at 59K, and that one hasn't held. Okay, so we don't have it. Now we have to try and validate at this level. And until we start printing full candle bodies back above this 100-day moving average, which correlates with this top of the 60K range, this was a prior consolidation range. So there is some validity to this. But we have not yet established a solid bottom. We haven't validated it, in my opinion. So what I want to see here is this progress continue, clear that 21 day and 21, the 21-day moving average, and make sure, of course, that we stay above the 21-week moving average, which has been strong support since October. Okay. So if we go back and visit this level, then we have some serious issues. And that could, depending on where this is relative to this 50 to 52K level at that time, if and when it happens, there could be some serious implications. If it ends up being, if we grind down a little further and this comes down a bit and correlates with this level, it would be conceivably a very strong place to establish support. But if we lose it, we really have to reevaluate what's going on. So that's what I'm looking for on the support side, right? What is going to validate this bottom? We need to print full candles above these prior ranges. And, obviously not happening out of today's candle because we started from down here. So we'll look for this tomorrow and the next day and the next day and the next day. And he breaks back into this range and he breaks back below this 100-day moving average, invalidates this breakout attempt, in my opinion. So this is the level I'm watching very, very closely. It is right at around 60K at the moment. And again, this changes. These moving averages move over time. So this will change day after day. That's what I'm watching at this point. So in terms of where the liquidity is as we head into the weekend, you can see we have bid liquidity has moved up above 60K. Hopefully that holds. And we have ask liquidity above. This kind of changed a little bit, right? My target was 65.5 here. And I say my target because I told you guys that if price broke below 59K, that I was likely going to be selling. And I ended up, that move happened faster than I expected. I did DCA my way down because I had bids placed there. And I had MTF obviously marking the MTF mean reversion indicator marking bottoms for me. Perfect Beautiful entry here at a 4% deviation. Uh, and that at the moment is that's a beautiful 9% move already, right? Let's say I didn't even get a great entry. Let's say actually, I didn't get a 9% entry, but still 8.5%. Solid move here. So, so there's that, and that remains my favorite way to find meaningful dips to buy and accumulate on. But what I've done is I've used this coin that I bought down at this level, the DCA, my longer term position, and I have sold a small piece of it already. Um, and now I'm waiting to determine whether I'm going to sell any more of it. Felt that I was overweight on Bitcoin and wanted to scale back a little bit so that I had some cash available for potential other opportunities, both with Bitcoin and maybe some high flying alts if I can narrow some down. So that's what I'm doing. You got to do what works for you. I'd love to hear about what you're doing and what works for you. Please, by all means, share a comment with me, and I will engage with those as I always do. I appreciate the support you guys are showing me, by the way. It's really been great, and I enjoy doing these videos. I actually toyed with. I'm experimenting, guys. As you can tell, I've only been doing these for a little while here. Started doing them live a few weeks ago, and which has been going well. But I'm getting some feedback from you guys, and I do really value the feedback. Getting some feedback that says you really like the written descriptions, especially those of you who don't whose primary language isn't English, right? So happy to accommodate that. I just it's a time crunch for me. So a lot of times I am going to do the descriptions in the down in the description. I'll do the written analysis after I actually do the video analysis, because we're doing the video analysis live, right? So I'll do a written description in there afterwards. But trying to do it, pre-record it and do them, I'm too freaking critical of what I'm doing. So I'll record it and I go, I don't love it. So, I did that 3 times. I'm like, what the hell am I doing? Let me just go with what I know and stay in my comfort zone. We'll rip the Band-Aid off. We'll do them live. I won't be perfect. But we're not looking for perfect. We're just looking for a good, solid, unbiased analysis. And that's what I'm trying to deliver for you guys. One more look at fire charts as we head into the weekend. This level right here, I'm watching it very, very closely at 60K. I always have concerns about new liquidity with a potential rug pull. So I'm keeping an eye on that. I think this is really here trying to push price up, which it has done so far. Meanwhile, we have the opposite happening from above as bears are trying to push price down. So we've got to see how this battle plays out. This right here is the local battle between bulls and bears. I think these are kind of micro ranges right here. I think that 65.5 is more important, but ultimately we've got to clear these levels. We have to see price hold above this 100-day moving average to even consider this a potential breakout and a potential bottom at this point. Candle by candle, day by day. Can't be in a rush for this stuff. Got to be patient. I think, at the moment, my assumption is that we're probably going to consolidate a little bit longer before we see a real solid breakout attempt. And to do that, I want to see more bid liquidity coming into this lower range, close to price. Let me level this out a bit. We have a nice ladder in here, by the way, of bids, but it's just not as heavy and concentrated as I'd like it to be. There's about, let me zoom into this for you, give you a good macro view, right? So from this level of about 52.5 up to 57, there's about 165 million in bid liquidity, which is good. What I want to see is more of this concentrated at one level, right? The ladder of the depth of the ladder is fantastic. It's one of the components you want to see. The other missing component is more volume here close to price. We've seen it time and time again on the bigger moves up and the bigger moves down. We see these higher concentrations of volume, 100 million with another, 60, 70, 80 stacked below it. 127 million right here. This is 96 million and another 93 million and another 58 million and another 30 million. There's hundreds of millions of dollars stacked at those levels to serve as a foundation for the next move up. The fact that so much of this ask liquidity has rained down on uh, the price action and pushed price down, the fact that it's evaporating because it's been used. It didn't just disappear. It didn't get rug pulled. It's been dropped on the market. And so as it gets absorbed and this thins out, it will be easier to penetrate. But at the moment, there's still a lot there keeping price suppressed. And we've got to get above these levels, and we've got to see more coming into this range right here, or wherever is close to price at that time. And it might take time to develop, and it might just appear in a moment, because that happens too. That's how crypto works. That's the Wild West, baby. And so that's what I'm watching for. I'm watching fire charts every single day to see how the liquidity changes. I'm watching every single day to see if we get a new block of liquidity that comes in or moves up that gives us a clue that it's time to take off. And so that's what I'm waiting for. That's what works for me. You do what works for you. If I see anything developing, I do have actually a life plan this weekend. Some good events going on with family. Going to go see some live music. Got some volleyball with kids. Got a lot going on here this weekend. But if I have time and I see something developing that is significant, I will do my best to crank out a quick update for you guys. Hope you enjoy the content. And if you do, I appreciate any comments and shares that you might give me and help me grow the channel. I especially value the comments. So please keep them coming. I'm going to wrap it with that, guys. As always, trade safe and have a fantastic weekend. Do something you love with the people you love, and I'll talk to you soon.